Bank of England's Bailey says we don't know if 4.25% will be peak in rates, and I do not think we will see a repeat of 2008 banking crisis. UK banks are much stronger. We're much more hopeful now that the UK won't enter a recession. There are signs of inflation pressures calming down. We see signs of inflation peaking, but it's far too high. Pressures calming down. We see signs of
lost my stream. All right. Just trying to find this room in Discord. Hold on with me, or bear with me for a second, I should say. Hold on here. Here we go. So type in the Discord room if you can hear me, please. In the text channel. Anybody? Bueller? Alright, looks like I'm streaming on YouTube. Could you guys hear me on YouTube? Could someone type something in the chat if you can hear me, please? Thank you. Alright, I will be back in a minute and a half, play the disclaimers, and then I will be back.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and holds Capital Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight.
We have posted
In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I'm making for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade with an edge for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and can potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades, whether you want to go long or short. You have the ability to copy the spreadsheet and enter in your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty. Happy Thursday. So last week there was a lot of issues with, you guys were saying my sound was too loud. I think it has something to do with this Bookmap stream, YouTube stream that I'm doing. I'm using some software for that, so I will try to keep this low, but I need to obviously hear the alerts and the squawk box, so if it gets too loud, just let me know and I'll see what I can do about that. So, number just came out. Yeah, this software definitely messes with my computer because it messes with my mouse and it obviously messes with the sound. Anyway, new home sales just came out. So before this number, there was this is the new 6th setup of my trading setups called Step Brothers. Bruce actually from Bookmap named it. So you actually had buy stops with buy ice. That's this zone here. So actually, I think this is potentially a bullish setup. So the way I've determined that is I put these zone prices where this volume event occurred into my spreadsheet, and then I see if it was able to move an ATR out of that area, which signals to me that it's a bullish event. this was the zone price here, and this was the ATR actually at the time. Let's see what it is now. And it's about the same. It's 4.89. Oops. Dummy alert. So for this to be a bullish setup, it needed to touch 12.25. I think it touched there absolutely to the tick, like it always does, it seems like, especially when I'm not taking these. Let's see. It's pretty amazing how often that happens. Actually,
Gold Ice Iceberg
so
by GC. 154 contracts.
this actually is not a bullish setup yet for me. I did miss it by 2 ticks. You can, if you want to be a little more aggressive, you could take this trade, but I'm going to wait for my, my rules are. That's why I have the prices in the spreadsheet from watching thousands and thousands and thousands of these setups. I've determined the best way to trade them is to wait to show the market can push an ATR out of the zone, and then a retest, then a failure, and then I go long. This is the conservative entry. There's times I'll just, the minute it breaks just outside an ATR out of the zone, I'll go long right away. But this is not one of those times as far as long or short. We're not really in an area here. As far as my inflection zones, we call them in my room. So these zones are drawn on the 4 important areas of charting: tops and bottoms of balance areas. High volume node of balance areas, which that one is. Buying and selling tails. Those are 2 monster tails from yesterday. Really important area to keep an eye on if this comes back up here. And then directional conviction. So you can see these areas where this directional conviction came in. When these markets come back, like in gaps are directional conviction as well. So you can see this market came back to this area and put in, not only did it fail, put in 3 selling tails and then led to this move. So, and then you can see yesterday, that's exactly where it stopped. So we have specific trading. I'm trading specific trading strategies for different scenarios, and one of them is we call them the Izzy. This is an inflection zone trade. So what I've done is I put each one of these strategies on Apex. So we have one of these is already live on Apex. So as it's profitable, you got to be profitable. We'll go over this a little later, but this is the funding site. I've been using this now to. Actually, that's not what I wanted. I did this. Was it last year? Yeah, it was about a year ago. I did this basically for my traders in my room to make sure. This came well recommended from a veteran trader that I know, and he vouched for it, and I did it, and to see qualify and see if they do everything they say they're going to do, and then so I qualified and then got paid. So it's legit. The best one I've seen out there. They're popping up all over the place. It's it's actually a great business model when you really break it down, because 95% of traders fail. So you would think just taking fees from traders is a good business model, which it is. But these guys genuinely want to fund traders, and that's what I want. I don't care if their business model is based on the revenue from traders doing these tryouts or whatever, but I care if they really want to fund traders. And there's a couple out there that have no they don't really want to fund traders. They want to take traders' money on the fee. So from my personal experience, so that's what I use. But anyway, each one of these trading strategies, and we'll go over these as they occur, hopefully today. Hopefully we'll get some trading going on here. We'll go over each one of these, but this is an inflection zone trade that we look for easy. So I'm just waiting to see how this market reacts to this. There was actually a setup right after the number. There was a stop run in NASDAQ. So let's take a look here and see how this is reacting. 178 buy stops. So the best way to draw these zones, take off your bubbles. You want this last price line, this white line. Right click on your chart if you don't have it. Configure visible components. And then pick last price, and then you'll be able to get this line. It makes for a noisy chart. I actually never had this up for forever. Right when I started Bookmap, I had it, and I said I don't like that, but it's crucial to be able to draw your zones accurately, because before I was drawing zones, before this, it only took me about 4 years to realize I shouldn't be drawing the zones to the tops and bottoms of bubbles. So my zones were never exactly accurate, but now they are. So very important, because ticks matter, especially in these zones. So anyway, this
ES
spike.
June stopped by ES. 549 contracts. NQ stop by
so we
NQ 184
So
contracts.
we got two more brand new setups now, so I'm not even going to draw that one right now. I'm going to go to the most recent currents. And we'll hop over to ES first, since all you guys love to trade that crappy market for some reason. There's just so many other options out there. I'm not saying don't trade it, but you definitely want to be looking at other. Don't pigeonhole yourself into this market. I still to this day don't understand why everyone just stares at ES all day long. You know, granted, this is the market that made me millions of dollars at one time, but you know, it's not the end all be all. It's not all that in a bag of chips, as people say. So this was a stop run. This up. As you can see, this tick strikes firing off with these stocks.
Crude stop by CL 152
We have
contracts.
buy stops in crude as well. Actually, I think there's a couple setups happening here in crude, a couple trading strategies. We'll get over there quick as possible. So this zone, you want to expand your price lines just to make sure you get this right. So I'm going to pull this down here. And that looks like it started. Actually, it looks like this is what started that. Well, it wasn't this price that started those sweeps, or the stop runs. We'll get into this, but this is the right
Copper
price. I don't
stop
want to
by
confuse people right
HG
off the bat here.
243
Stuff
contracts.
flying off everywhere. You got copper stops. All right, so this zone's 1475 down to 1175. So first and foremost, we put the values in the spreadsheet. So this spreadsheet, I get emails all the time. This is proprietary to my trade room. If you call my trade room, you get the spreadsheet. And this thing is a godsend. Trust me, it is. Makes your life much easier, and you're trading much more consistent and streamlined on what we're trying to do. So we put in the zone prices, and then this is really important factor, the ATR, average true range. So I'm using a 5-minute thinkorswim average true range. This is basically just showing me the range over the last for every 5 minutes. So right now this market's rotating about 5.25 ticks, 5 points every 5 minutes. So that's really important. Like yesterday, the thing was up to 14. Right, so you can't. Those of you, I know I harp on this every week, but it's just one of the major flaws of traders that you're using these static stops. Like I like to risk 2 points and to make 5 in the ES. Well, again, you have to. That doesn't. You're not going to make it as a trader if you're just using static stops that were trailing your stop and so on and so forth. I'll get into that rant later, but you have to adjust to the volatility of the day, or you're going to put yourself at a disadvantage. You could get lucky, but you know. This is trading. You don't want to be getting lucky. All right, so we will wait to see which way this breaks out of the zone. Some other things. Let's see if we're in it. So we're not in any inflection zone. This is basically just recovering this directional conviction bar from yesterday. So this could make it all the way back up to here, which will be an awesome shorting area. But that's a little bit of ways away. So I really don't have an opinion here as far as a thesis, right? So I'm a day trader. I'll trade either way based on those volume setups. But when I come up with a thesis of the market and then I start getting volume setups in that direction, then I can trade bigger, right? So thesis wise here, this is looking short-term bullish right now. So this market opened up. Let's just break this out for yesterday. What happened yesterday? So this was yesterday's trade. So you can see, tried to break out of this puppy, got back in when markets accepted their value. Tendencies moved to the other side, moved in here, closed in here. Didn't get down to the bottom. That was telling you something. And then we opened up, gapped up, opened up here into this bigger one, and then it's into. This is the last 2 days, so that this short term, this looks bullish. Longer term, it's not really bullish or bearish yet, but it's not bullish either. So I really don't have an opinion, and that's fine. You know, every day you're not going to just have some clear cut, slap you in the face opinion on what's going to happen in the market, right? So, like I said, whatever way this volume setup breaks, I'm going to trade it, long or short. If I had a strong opinion, then I could put on more in that direction. That's what I'm getting at here. So that's yes. Let's see what happened in NQ. So you had 216 stops there. That's definitely threshold. This is not threshold, but you can see this is another great thing from Bookmap, the sweeps indicator. You can see somebody's sweeping, someone swept. This is part of that stop run, but there was a total of 600 sweeps here, and there's another 500 sweeps right here, and only 132 of those were stops. So somebody's sweeping the order book here. So, you know, I don't draw zones off these sweeps by themselves, but all stops are sweeps, but not all sweeps are stops, right? So this is a decent example. This is only 100-something stops, but it was 500 sweeps. So, you know, if you want to trade off these sweeps as far as zones, you could, but I would use three or more times normal threshold. So my threshold for the SI indicator, stop iceberg indicator, is 150. So I don't draw any zones unless this is at least 150. For these sweeps, if you want to play them, you could, because obviously traders are getting swept, and that's important. But I would make it at least 3 times your threshold, right? So you're looking at least 400 or 500. So these would be drawable sweeps if you want to trade those, but we don't trade those as of right now. We're just I'm more focused on the volume events on the SI indicator because it's
Italy's economy minister
most
says
powerful thing
recent
you can
data
possibly
shows
use in
that
futures
growth
trading, in my
targets set by
opinion.
the government in
And
November
I've seen
could be
quite a
reached
lot of
or exceeded.
action in my trading career, so my main focus is waiting for setups on this SI indicator. Alright, so let's put this down here. So I use yellow. I try to color code them so I know what happened, right? So I'm using white or yellow for stop runs, blue or whatever color it is for, I'm trying to match this up chart, right? So blue for buy ice and black for sell ice. So all right, let's put these values in. We got 927.50 down to 920 is your zone for NQ. Then I want to get over to crude. I don't want to miss crude because I'm pretty sure that there's a couple trading strategies that are possible. 12,920. So you can see yesterday, like this ATR was up to 54. That means it was rotating 54 points every 5 minutes. Right, today it's at 22. So you can see why using static stops is just not the right answer, the right idea to be trading. It's just not. You have to adapt to the volatility. The markets don't care that you only want to lose 10 points in the NASDAQ when you put a trade on. They do care. It does care about volume events and volatility. I say the same thing every week. I'm well aware, but that's the most important thing you can be doing. All right, to make this a long setup, this needs to touch 49.50. Short setup, 98. So did this get up to 49.50 on this first move up? Sure didn't. So, and you can see the usual liquidity here, the big money that always seems to get their fills because they make themselves get their fills because they push the market into their orders. And I know this for a fact because this is the game I used to play all day, every day when I was a scalper. So my setups and my course and what we trade off of in my trading room and what I trade off of are based on my personal experience as a scalper, right? So, and how I used to react when I was caught, so on and so forth. So these volume events, you know, are areas that traders are caught. And I don't care, like, for instance, I put in Twitter the other day, there was massive, let's see here. Let's see, who posted this right here. Mind-boggling 15,000 buy icebergs. That's the most I've ever seen. And it was in this area here. Right? And it was right at a spot.
Soy meal ice iceberg sells EM.
So I'm sure
150 for contracts.
If not all, it doesn't matter. There's somebody on the other side of this trade. So even if somebody's buying futures to hedge their put positions, which would be just mammoth, by the way, 15,000 contracts is insane. There's somebody here selling this too. So we monitor how it reacts to the area when it breaks out here. So
time, we get the EIA
I had a couple questions on this Twitter post, like, well, you're saying to go long. I never said anything about going long. I just said mind-boggling 15,000 buy icebergs. It's how the market reacts to that area is what I'm concerned with. Yeah, I mean, I would say more often than not, the market will move in the direction of the icebergs because, the big money will just, a lot of times, like in that instance, it kept trying to sell off and they just kept putting in ice. Eventually, guys are going to say uncle and say, okay, I'm not selling this anymore. But it doesn't mean that paper's always right or the big money's always right. They're right more often than not, in my experience, because they are the big money. So they are the smart money. And the reason they're smart is because they are bigger and they can do what they want and they push the market around. So it's how it reacts to the area is what we're looking for. And just like we're sitting here waiting for this to figure out, so their stop runs are usually pukes. So there's pukes here. Then you had some sweeps here too. So there's good investment in this area. Somebody's going to be right. Somebody's going to be wrong if it goes the other way. So we wait and monitor how it reacts to this volume event to figure out which way we want to trade it. And like I said before, if it was in the direction of if I had a strong conviction on this market, then I could trade bigger, but I don't really have an opinion here, right? So, I mean, this market definitely, this was very telling. Tails are very, very important, right? That's instant rejection. This is an hourly chart, so it's not quite instant, but it was pretty instant. And then you had this, and then you had that. That's definitely not bullish. But I mean, as far as structure is concerned, you can make this one bigger balance area here, right? And then you had another one here. Oh, just balance areas are just two-sided trade where traders are placing bets. So you can see this held where it should have held to potentially still remain bullish. Now what's going on here, you had a little balance over a couple days, some more balance. That was that huge iceberg area, by the way. And I don't care what they were doing there. That was obviously not the best place to be buying. I don't care what they're hedging, so on and so forth. They could have been doing it down here. So 15,000 contracts up there was not a good call, right? It looked like they had it, and they couldn't be real happy when that happened. So anyway, you had this balance, then you had that. That's definitely a fail break out of both of these structures, so that's not bearish. I mean, that's not bullish, but it did hold this for now. So I don't have an opinion is what I'm getting at, right? It's like I'm a day trader. Whatever way these volume setups unfold, I'll trade them. If we start breaking, like for instance, if this gets through this, and this zone is taking these tails into account, it is right at the high volume. Now, like if this market gets through that, then you got basically one more bigger one. Then I'll have like strong conviction. I want to just be taking shorts, that kind of idea. But right now, I don't really have an opinion. So we will just sit here and wait, be patient like snipers, waiting to blow someone's head off.
UK's PA Media says TikTok will be blocked from all parliamentary devices and the wider parliamentary network.
This is important too. It looks like they're probably, this is almost a trend up day already. So, we talk about this in my room all the time, where if you're seeing this ADD, the advanced decline line, all this is the stock universe, how many stocks are advancing versus declining, net, right? So 1,500 more advancers than decliners. If you start seeing this over 2,000, it's a trend up type of day, and you want to potentially just avoid all shorts, right? You just want to be looking for longs because, yeah, there will be pullbacks, but they're very short-lived, right? So it'll be like something like this, and then there will be a juke move pullback, but it's shallow, and then the next move's like that, and then it's like that. So do you really want to try to catch these little shallow moves, or do you want to try to get on the train for the bigger move? So it's not quite there yet, but you want to pay attention to that. You can see, like, so this is obviously everyone knows about the VIX. VIX is on its lows. This is up here. This is the synthetic of all the FANG stocks, right? It's just all of them combined. What does it look like? Looks like that's breaking out of a little bit of balance that it formed this morning. So another thing that you always want to take a look at is the tick, NYSE tick. This is just telling you how many stocks are upticking versus downticking, right? Not complicated stuff, but it is important to say, like, if you're looking for shorts, if this thing can't get below the zero line and start tagging some, 500 is not even a lot, but if you want to be short, you need to see this thing tagging, 1,000. If you're looking for bigger moves, like yesterday, this was a shit show, pardon my language. They were pounding it, and that's why this led to the demo. This was liquidation, right? When you start seeing negative 1,500 ticks, then that means the big
At
money is
10:30
dumping,
a.m.
like the
Eastern
funds,
Time, we
so
get
on
the
and so forth. So
EIA
that's
natural
important. So you can
gas
see the difference
change
between yesterday
forecast
and
minus
today. Today can barely
72
break the zero
BCF on
line,
the
same
prior
on the
minus
NASDAQ tick.
58
So this
BCF.
is something to keep an eye on too. So if this can change rapidly, right? This can all of a sudden start doing that. Then you're like, okay, hey, I want to look for shorts, that type of thing, right? But all this stuff is important to look at. And it's not complicated, right? It's just common sense. Stocks that are up ticking and down ticking. All right, so we're just hovering in these zones as usual. It seems like every webinar lately is just sitting here looking at paint dry. I can answer some questions. Oh, I forgot about crude. I'm sure I missed a trade because I usually miss trades when I don't get over here right away. All right, so this is the stop run. So this was 150. It was barely threshold, but that's threshold. So I'll draw the area. So this is. So I want to incorporate all the prices that happen in this spike. So I get my little crosshair dude, and you can see where it started, where these spikes started. All right, that was right about. You can see the line on the chart too. That's the stop run line on that icebergs on chart. So we have subchart and on chart. I don't draw my zones off of the on chart. I use it to help me, especially with the spikes and stuff. But this is what I draw it off of the subchart. And that you can see. So this isn't drawn properly, right? I didn't catch this move. These last prices up, and that's still inside this spike. So I gotta. You can do hotkeys for all this stuff too, so you don't have to. Otherwise, you got to come in here manually, as you guys have seen me do it thousands of times. Hit edit, then horizontal line. Then you got to get out of the edit function. I mean, I've been bitching about this drag tool for 4 years now. Hopefully, they'll get it taken care of soon, but it's very tedious. So anyway, this is exactly what I thought was going to happen up here, because I was eyeballing this before and I was like, I want to see a stop run up here, and I'll show you exactly why. So this was the Dada setup. So this is a Dumb and Dumber aggressive opposite delta trade. So what I look for here, this is the exact setup I look for. I should have just come over here right away, right when I heard this setup. So we have extreme standard deviation. That's number one. It's got to be at, so here's VWAP, here's one standard deviation, here's 1.5, 2. So is that 2 standard deviation? The other important thing, obviously the stop run, that's number one. At extreme standard deviations 2, 3, you can see the delta divergence here. So this is just showing you who's being more aggressive, buyers or sellers, hitting at bins or taking the offers. Well, this thing made new highs and this didn't. So that's a factor. And then the other thing we use is algo, guys. So this is exponential moving average cross. We want to see this thing extended away, because you just get help with the trade, right? So you know when this thing gets extended away from the blue, this is the short-term exponential moving average, this is the longer term. When this thing gets extended, you have these algos come back and snap it back. So we have 2 different algos working in our favor. We have the moving average algos that snap it back to the current moving averages, and then you have the VWAP algos. So you got those guys on your side. Then you know it's not real buying up here because it's just a stop run puke, right? So you got extreme standard deviation algos, you got the exponential moving average algos, you know it's not real buying, and then you also have guys hitting offer or hitting bids more than taking offers. All those add up to an incredible trade, and I missed the trade. So let's just put this in so I can see. I might get lucky and have this retest this
1 minute remaining.
about it, because every trade it feels like in my life that I've ever missed just never comes back. So again, that's pretty much in my head, but it sure feels that way. All right, so the zone for this stop run is 57 down to 51. So let's just see where I would have entered this trade. Maybe I get lucky and it comes back. So 1. ATR in here is 21.3. The way it reads on the Thinkorswim is 0.21, but that's just telling you it's rotating about 21 ticks every 5 minutes. So this particular trade is an aggressive trade. So we were talking earlier about the ATR retest. Oh, by the way, I think we just got one
10
in
seconds.
NASDAQ. So I don't want to miss another trade, so let's just watch this, and then I'll go back to crude here in a second. So that, remember, we were looking at the price. Make sure this ATR is current. It's up to 22.55.
Minus 72 BCF, minus 72 BCF as expected.
So that, to validate that as long, this market needed to touch
NQ Ice Iceberg sell NQ 152
That's
contracts.
exactly what it did. Right? Just went a little higher, and here's your retest. There, we have a trade for this specific instance. It's called a reversion trade, and that's actually in the spreadsheet too. Guys are killing it. There's a couple guys that are doing very well in this. So we've got 1, 2, and 3 ATRs. That was the one ATR. So here's your retest. So this is an official bullish setup. So now what I will do here, this is at minimum the BARF setup that we call BARF, blind ATR retest failure. No matter where we're at on the chart, if I get a volume event and I get the ATR retest failure, I go long. Right? So let's just see if
Russia's Novak says Russia's oil output.
Hold on, I'm going to see if I can still get in this crude short. NASDAQ will wait for me. It doesn't move much, so I got nothing to worry about there. So I should have been short at 27. I could put on 9. I'll put on 10. We'll talk about the micros here. You should be trading micros. You should not be just trading one big one. If you can only trade one, trade 10 micros. So the Dada is number 41 on the Apex. So let me pull that up and put this order in real quick. All right, so if this does come back, that's not the right count. Hold on. All right, so if that comes back to 27, I'll get short. I already missed that trade. So again, I can almost promise you this is not going to come back for me. But it may, because you can see up here too, we talk about this. Here's all this liquidity up here. So does that deter me from taking this trade? No. I mean, I'm still taking this trade based on what we just talked about. But would it surprise me to see this come up and take this liquidity? Absolutely not. So even if I get filled on this short,
on the feed
if I get lucky enough to get filled on it, and it does stop me out, well, I'll be then they tag all this liquidity, and I get another stop run. I'll take the trade again. So that the whole idea is you're utilizing your odds and your the percentages, right? I know this is an extreme edge trade. I just keep putting it on. Does it mean it wins 100% of the time? No, nothing wins 100% of the time. Right? You just, if you have an edge, you keep putting it on. We talk about it all the time. I won't get into this rant right now because you're lucky. You guys are lucky. I have to draw the ES, see what happened with the ES. But you want to trade like you're a casino, right? You're just taking the hands of the big bettors, You win some, you lose some. You know, over a long series of trades, bets, that you will make money if you have that edge. And this is the ultimate edge, in my opinion. All right, so what do we need in here? I can't remember. To make this a bullish setup. Remember, you're always checking your ATR to make sure your current is the same. It's 5.27. So this needed a touch 20 to be a bullish setup. Didn't quite get there. So this one is not a bullish setup yet. We don't know what this is. It has not reached an ATR out of the zone to the upside or the downside.
Russell June Ice Iceberg by RT 151
I'd be very
contracts.
surprised if this doesn't at least come up here and tag that, but we'll see. So there's nothing in play on this last volume setup here in ES. We just heard something on the old Russell as well. We'll go over there. So this is the ATR retest. Let's just see where we are on the
ECB's Visco says euro area inflation expectations are
I told you
substantially
that market would not
anchored.
come up and fill me. Bye-bye. Another missed trade. So that's one of the
ECB's Visco
bad
says the
things
risk of a
about the
wage
webinars
price
is I'm on
spiral
one
so
screen
far
and
is
I'm trying to draw
contained.
zones on one. I can't like scan everything, and it definitely costs me sometimes. All right, let's see, NASDAQ. So this was yesterday's trade. It's basically just hovering around yesterday's point of control. As far as any kind of ISIs, anything like that, there's really nothing here. I did draw this zone. It's a pretty wide zone, but took into consideration this huge buying tail, and then this is where this other buying tail, or I'm sorry, selling tail started. So selling tail, selling tail. I will be very surprised if this market just rips through all of this right away. I would be, and trust me, I've seen it all, and I know what these markets can do. I know the nonsense that they can pull. If this thing gets through this tail and just rips, I would be flat out shocked. So what I'm hoping for is a move into this zone to short this puppy. But I don't really have an opinion here as far as, what this looks like. Yes, bullish or bearish. If this would have
ECB's
broken
Visco
this
says monetary
puppy
tightening
here,
is
then,
already
yeah,
having a
and
visible
got to this high
impact.
volume, no, then I would have said look out below. But this held. What did this hold? This held the top of this balance area, which was basically this zone. We had tail. This was a gap up, and the top of this balance held perfectly. So that's not bearish, right? So and then this is not bullish. So I have no opinion. I keep saying that. Doesn't mean I'm not trading, but I have no conviction on which way to go. So I'm definitely not gonna trade bigger on my setups. All right, so we're just waiting here. Some things to note here. Actually, this was
ECB's
so this
Visco
could have
says a fall
potentially
in
been a
monetary
Dada setup. So
aggregates
if you
could
get one more
limit
move up and get a
consumption.
stop run, you're gonna get a Dada here, right? See the diverging delta. You see the extreme standard deviation. This particular volume event was bullish. Here's the retest. We haven't got the failure, but it got an ATR out of that. So this one is not a Dada to the short. The Dada is like a fade trade. But if this comes up one more time, I get one more volume set up, and I see that's the Dada, and we might be able to even get a slug. The slugs are probably, when all is said and done, when we get all the stats put together for all these trading strategies, the Dada, the Izzy, and the slug are going to be the highest percentage winners, and the slug is going to probably be number one. So slug is just a stop run at a major lug. So these are Ludwig levels. We talk about them every week. I always get questions on this too. And go to our website, her new updated website. It's literally like state of the art. Just kidding. It's like from 1982. I always make fun of her, but she doesn't care. She said it does. I can learn how to spell. It does the job.
Weak ice iceberg by ZW.
I put
151
lug. See, on my
contracts.
subconscious, I put lug in there.
ECB's Visco
We
says
named them
cautious
lugs in my room
approach
because it
should
got
guide monetary policy decisions.
it just gets old saying Ludwig levels 85 times. So anyway, put your name in here. Say you saw it on the Bookmap webinar. She's got special pricing for you. You can get a 3-day trial to check them out. They are the second most powerful thing I've ever seen in my trading career, next to the Bookmap, and Bookmap SI indicator. So anyway, and you can see, like, look at yesterday. I mean, just insanity. This thing comes down to the exact. I was actually sure we got short in the room here at the end of the day here, and I got out. Actually, I got out right here. It was close enough. I'm like, I don't need to try to squeeze out another 20 points in this crazy market. I'm out. And I mean, it literally tagged it to the tick, and then there you go. I mean, if you like 300 points off the lug, then lugs are for you. If you don't like 300 points, then maybe don't use them. I don't know, but they are ridiculous. So anyway, this would be just perfect if this did one more move up here and we got a volume set up there. It'd be extreme standard deviation. You got your lugs, and then you're into those tails. This is a really, really, really good place to short if it gets up there. Doesn't mean I won't take shorts and on other things, but that would be a primo area. That would be an A+ area. That would be an area that I want to trade bigger. Right here, I don't really have an opinion. And like I said, this current setup is bullish. So let's put this in. Let's see. Just remember, you got to stay on top of this ATR. Very important. Get this in and maybe answer some questions. It's one thing not bad about not having Bruce on here. I can't do this and answer questions. Look at the questions. So if I'm going long, I'm long at 52.50. I can put on 4.35 micros, so 5 micros. Round up 52.50, and that would be the BARF. This is just the blind ATR retest failure, the BARF setup that I was talking about earlier. Let me get this set up. 52.50 is where I go long. You should be able to hear the fill when it comes up here. So I have this turned down so people aren't yelling at me this week like last week. And again, I apologize if I was grumpy pants last week, but I never had that complaint in my trade room that it's too loud. I figured out it's probably because of this Bookmap. I keep saying Bookmap. YouTube software that I use, it amplifies it for some reason. So apologies for that. But anyway, I will be long if this comes back up to that price. And it looks like it's going to do that. And that's fine. And then I'll go long, and then I'm going to watch very intently if this thing starts to rip into that lug up here near 13,000. So we wait there. Still don't know what the setup is in the S. Like I said, very likely going to tag this liquidity for, if anything, because that's the big money, and they will push the market into their orders. All right, let's see if you guys got any questions. Throw them in Bookmap if you can. I mean, how many times when I say Bookmap? Throw them in YouTube if you have questions. No questions so far. That's nice. It's going to zero, Scott. Don't be shy. Feel yourself. Unleash the pair. Yeah, I've been saying we're going to zero since COVID. That hasn't really transpired yet. It's a perfect example, guys. Like everything that's going on in the world, you would think these markets, like ES would be at 3,000, right? That's why you don't just talk yourself into something that should happen. Let the market tell you it's happening, right? Like this is all after the bank nonsense too. You would think this market's down here, at minimum down here. Instead we rally. It's like this is why trading fundamentally is just, it's hard. It's very hard. Because I'm not saying this thing's not going to turn around, but you have to endure. Like, what do? Are you going to trade futures? And you get short down here during the banking, all the the 4 banks that went under or whatever it was, and then you're going to hold it all the way up to here, convinced that we're going to keep going down. What's the saying? The market could stay irrational longer than you can stay solvent. So yeah, this eventually is probably going to be down here, but it may do that first, right? So that's why we trade what we see with volume events. Real-time volume events. All right, let's see what you guys say. No yelling at me about the sound today. That's good. Scott, you're awesome. Thanks for all your share and teach us. Thank you. I've incorporated ATR in all my trades now because of you. Absolutely, it's so important. I just got filled on the. I almost didn't hear that because my volume's turned down, but I got filled on Nasdaq. So I'll go back to the questions here in a second. So this is BARF. We named it BARF. Any volume event. If it goes an ATR, a retest, a failure, I take the long. Now my stop goes an ATR plus 15% below the volume event. So I'm forcing this market. So first of all, let me just get this in. So I'm risking 57 points right now. It is what it is. That's what the ATR is telling me to do. I don't change what I'm risking because I don't want to risk a certain amount.
Stop by NQ 162 contracts.
This is actually perfect because now I can trail myself in the newest volume event. Anyway, 57 tells me I can trade that. So watch this. If this was like yesterday, this was 51 points. Now watch what I could have put on there. 2. See, I don't change what I'm risking point-wise because this is what the volatility is telling me I need to risk. I change my contract size. So that was 22.14. All right, so I'll come over here. Here's a new volume setup. So now I can trail my stop I'm going to trail my stop to this volume event. This was threshold, 150 is threshold in here. And then I can actually add to this trade, put another trade on, completely independent based on this new volume event, right? And this actually is a potential Dada trade short if this fails to the downside. So I'll be out of my long and then I'll flip and go short the Dada. I'm pretty sure we just talked about this, right? So I already had it in my mind. This was kind of like crude. I knew if I heard something up there, it was going to be a Dada, and I just didn't get over there quick enough and check. And actually, I got filled. All right, well, that's trouble. That means this is all going to get filled first. But I'm short crude now, too. We already talked about that. So this zone, quickly, let's get this in because I want to trail my long stop, and then I want to go short potentially if this fails. So let's see here. Just hold on, NASDAQ. Don't be doing silly stuff on me. 12,963.50 is the top of your zone. The bottom of the zone is what I'm concerned with, so I can trail my stop to it. And that is 56. See, that should be right on the exact price, so I didn't do something correct there. Let's see here. So, like I said, I'm sure the NASDAQ will wait for me to do all this. Not a big deal. So that's not where it started because you see red there. That means there was selling. I don't know why I screwed this up so bad. So that was there. It's still not there. So right, see, look. So I'm using my crosshair. This didn't start till over here, right? And that wasn't even threshold, but it started this whole move. So I at least want to know where this started. That's this price here. So you can see where the spike started right here on the crosshair. So I got to bring this up a tad more. So that's 57, 957.75. All right, so now I can trail my stop off of this new zone. So if I were to go long, I would be stopping out at 932.25. So you can see the difference here. Before it was
Crude Ice Iceberg Sell CL 162 contracts.
94.50, right? Stop order was 94.50. There's crude, by the way. Again, now it's so I basically just save 40 points of risk because of this new setup. So am I trailing my stop because I want to break even? No, I'm trailing my stop based on something that happened in the market. That's another huge fallacy, huge error that traders make. So now my stop goes an ATR 15% below the zone, right? What did I say it was? Good short-term memory. 932.25. So let me put that in. All right, so that's working. Actually, I need to put my crude stop in too because I got filled on that. Hold on. Yeah, there was a new setup.
ES Tune Stocks stopped by ES 549 contracts. NQ Stocks stopped by NQ 199 contracts.
I'm gonna get out of some of these. Damn it! Stop, please. So I missed it. That
US
was real
stocks
close to
extend
that.
gains. Nasdaq.
If this
up
makes another
2%.
wave up, I'm out. It's close enough to the red lug. We got now. This is what I was waiting for. Remember, I just talked about this. Look at this. All right, come back up there, please. Why can't I put an order in here? My Apex just froze. Oh, so then I just oversold by about 20. Hold on, guys. Something just froze up there, and I kept hitting the. So that's another thing too. If you're trading, don't keep clicking the. So this is what this looks like. Don't keep clicking this. I'm using the Apex, the rhythmic. So it froze, and I just kept hitting sell, 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 and then all of a sudden I was short 18. So don't keep clicking it, is what I'm saying. All right, so I just got out there. It's close enough to the red log. This is actually a place where I want to potentially short here. You can see 1,500 swipes, almost 400 stops. This is what I've been waiting for, right, to short this, potentially. Like, did you see me getting short right now? I got out of my trade because we're close enough. Let me move this back over here. We just talked about how powerful these lugs are, right? Like this is just like yesterday. That's close enough for me. I got almost a 50-point move out of it. I'm out of that trade. And here we go. Got Dada. Extreme standard deviation, volume, delta divergence. We have slug. Stop run into the lug. Right? These are all potential shorts. I'm not short yet because I still have to follow my rules and break down out of this current volume event. So let's get this drawn. I'm going to get rid of this right now. This was barely threshold anyway, so. I gotta remember to put that stop in. This is so annoying here. In crude. All right, so you can see the stop run. Use your crosshairs. Crosshair. I have the short in my crosshairs, but use your crosshair. I basically started right there. Went all the way up to here. Large zone. Doesn't really matter. It is what it is, right? I'm just adapting to what's going on. So 12,995 was the top of that zone. If I was a little quicker on the gun, I could have got on a much higher. I heard that stop run. I should have just jumped out because I knew it was near the red lug. So I cost myself about 15 points on that trade. 971.50. So let me get this in. So 12. They're still buying it though. 12. Wow. Everything's okay in the world, guys. Don't worry about it. There's nothing's bad going on. Everything's good. Just buy. Just keep buying it. It's the same routine every time. It's like, it looks like it's going to die. It does this screw you move, screws all the shorts, and then ends up dying anyway. All right. So this is the lug. Did you see? I'm not short yet, right? I don't just jump in. I need to see this volume event fail, right? This could turn into a bullish volume event. and I'll go long. I don't want to go long. I want to go short, but I let the real-time volume tell me what to do. I have rules on how the market should react to this volume event. If this turns out to be bullish, then the minimum I'm going to have on is the barf trade, long. Right, so you see, I posted one of these in, go to my Twitter page. Actually, this was this last trade. The last thing I posted on here.
19, Kansas
Before,
City Fed Composite Index forecast
that
minus
last one that I
1.5
posted
with a prior
with
of
the
0,
icebergs,
and
this
the
one here.
Kansas City Fed Manufacturing saw a prior of minus 9.
Right
As
here.
well, we expect
Good
comments from
webinar.
Bank
This
of
was
England's
March
RAB.
13th, where I didn't let what I wanted to
ES
happen.
2 Ice Iceberg by ES 737
I wanted to
contracts.
short in this instance, watch this webinar, and the volume told me to go long, and I went long, and I caught a 25 point move out of the zone.
So Bank of
it's
England's
like,
man
I
is
want to be
analyst
short
at
here,
the
but
Peterson Institute
I'm
for
not going to
International
force my will on the market.
Economics
The market will
Conference
give
on
me the
Floating
finger.
Exchange rates.
I'm letting this tell me what I want to do. All right, so this is going to be a while to see what happens here, so we'll be back to that. Obviously, ES, we're not in any kind of zone here in ES as far as an ISI. Actually, I want to see. We are into the zones here. Hold on. Yeah, so this is an ISI as well. So I have potentially 3 short trades here now. This is the exact zone that I was just talking about. So we have Dada, we have Slug potentially, and we have an ISI. So I have potentially 3 different strategies I can go short here if that volume event fails. If it doesn't, then it doesn't. And I move on and end up taking a painful long. All right, so you can see here, nice little puke. As usual, screw all the shorts, get them all out, and then sell off. There we go. That goes all the way up to there. That's the sweeps indicator. This is part of Global Plus.
Up around
You guys are doing yourself a
1.4%
disservice.
on
You
the
don't
session.
have Global Plus, so you get these sweeps. There's so much more that you have, and it's not that much more per month. Go to my website. Can I show this quickly? I show this every webinar. Everything on here has discounts on my homepage. All right, go down here. Bookmap discounts, Apex discounts, Spot Gamma no, but this one you get an extra week. Tick Strike discounts, Trader Sync, you should be using this too. Very important, all discounts. All right, so this zone is 27, 40, 27. You can hear they're buying it like there's nothing wrong. And this is what I mean. It feels so irrational, right? Doesn't matter. It doesn't matter what we feel. Market says, yeah, not so much. We're going to go ahead and run it right up here. You know what? I mean, I didn't even had guys posting in my trade room today. I'm selling this with both hands.
Soy Oil Ice Iceberg sells EL 151 contracts.
Because that's what it felt like. It felt like the markets were going to get smoked. How did that work out? Did you guys see me short at any point today? No. I might be here, but I thought we were going to sell off too. Doesn't matter what I think. All right. So here's your prices. Here's your zone. Current ATR. If this gets up to 33, I'm sorry, validation 3250. This is an official long setup. So that's already pretty close. Let's just see where we are. See if we got any dead ass slugs. So this is, it's nothing as far as there's no Dada, right? Dada is a delta divergence, extreme standard deviation of VWAP with a delta divergence. That is not diverging, that's moving with the market. So I can't take that short. There's no slug, we're not up at the lug yet. Some things to note here though, this is extreme standard deviation where you get those snapback algos, and we're close to this point of control of this current market profile composite. So that's important. I don't have a setup for that as of right now. So these trade setups are just the first 5. I've got about 3,000 on my mind that I've always, just done off the top of my head. We're going to take these very slow in my room, but there's eventually going to be like 30 of them. My room's confused enough. Try to put on just those 5. It doesn't mean you trade all 5, right? You pick a couple that you really like I said. This one's going to be a good one. They're all going to be profitable, but I will bet the Slug and the Izzy and Dada are the most profitable. We're going to know because we're keeping the stats. It's much easier to do in the Apex for each individual account on the Trader Sync. I think I showed that last week. That's this here. So it's, whoops. I love the new Windows thing, by the way. You drag the window and it gives you like 12 windows. So that's this. I haven't refreshed this for a while. But this is going to keep track of all the strategies, and we're going to know the exact winning percentages, so on and so forth. This is the best one
So just seeing Kansas City come out early
and they
here.
got
So
it squared away. They're
zero,
having
zero,
some
slower
issues
than
as far as, like,
forecasted,
capacity and
higher than
stuff, but they,
forecasted -2. Apologies there. So it's 0,
they
higher
got
than
this
forecasted
squared away.
-2.
This thing is really, really incredible as far as what it shows you. And so this was the, I think this one blew out actually, but let's see. Like what,
It's 5 minutes away now to get the Eurozone consumer confidence flash. The forecast
see
of
what slug is.
-18
I
spot 2 on
just
a prior
updated.
of
We're going to update this once a
-19.
month. The last update was March 6th, though it doesn't have any. It's not current. But 40, I think it was 43. Let's take that one off. Oops.
So as well, we're
it's-
expecting the
this
Kansas
thing's
City
incredible.
Fed manufacturing. We
Go
did
to my
see the
site.
release of the Kansas
Well,
City
it's
Fed
worth us to go
composite
over right
early
now
at
because
0.
again, I haven't updated anything.
And as well,
I
we're
do it
expecting
once a
comments
month,
from
so
Bank
we'll
of
look at it
England's
next
man. We have
month, and
posted
over
the
next
video to
3-4
Bank of
months,
England's man on
we're
the
gonna
news
see
feed for
exact
those of you
stats,
that
and
are
I'm
interested.
willing to bet that every one of them are profitable because I'm trading off the most profitable, the strongest edge that can possibly be in futures, in my opinion, and it's this stuff. All right, I forgot to put in my. So I did get filled on this short. Like I said, it would not surprise me to get stopped out here going into this liquidity. I don't avoid the trade. I know what's probably going to happen, but it doesn't mean it couldn't do this first, right? So I don't avoid trades if I see liquidity. I have specific trades to go to the liquidity. This one wasn't one of them. But, you know, if this does stop me out, it's just one of the trades in my percentages, right? It's not. It's just on to the next trade. When you play blackjack, you sit down at a table, or if you're the house, you deal a hand and you lose. Do you quit? Oh, it's on to the next one, on to the next one, because you know you have the edge. So anyway, if this does rip up here and stop me out, then I'm going to be ready to do it all over again because everything will still be in play. Speaking of which, let me get my stop in here. That's kind of important. Make sure this is up to date. Yep. So I shorted at 27. I stop out at 81. Put that in. All right, so that's working. So like I said, though, if I do get stopped out, I already know in my mind where we're at. Nothing's really going to be changed. And actually, this could be, if this comes up one more time, it's going to potentially be a slug like the NASDAQ, right? So say it stops me out, pops a little bit above here, but then we get another stop run. Well, I already know delta divergence. I know slug, so I'm ready. If I get stopped out, fine. And actually, then I could put another strategy on too. So I got Dada on. If this comes up, stops me out, I'll have slug and potential another Dada. I'll put them right back on, right? That's trading, guys. You just got to keep taking them. So a perfect example yesterday. I didn't want to start rehashing this because I feel like I'm getting kicked in the stomach. So I made a bunch of errors yesterday. I was being an absolute clown, trading while Paul was talking. So I decided to trade while he was talking, and that's fine. If you want to roll the dice, you just got to realize, by the way, nothing is happening yet out of these setups. I have my stop trail to this. Actually, let me, before I get upset on my clown show that I put on
Eurozone
yesterday.
consumer confidence flash coming
I
out
want
earlier,
it short. Remember, I'm going
-19
short
spot 2,
aggressively off of this
-19
too.
spot
So
2,
my
lower
stop
than
has been
forecasted
trailed up to this
-18
price.
spot 2.
Wait, why is this different now? Why is it 44 quarter? Hold on. I don't remember changing anything there. Or was it 44 quarter?
And the Kansas City
no, you know why
Fed
I got out.
manufacturing
I got out of the
index
trade.
coming
Remember,
out
I got out
at
of the
3.
plug. I was long.
3.
I thought I was still long. So I'm out of that, but I will now short. So the stop is the same as the entry. If this comes down 944 quarter, I'm going to put on both slug and Dada. And I'm going to put on 3 points. So I'm going to put on 4. So that is number 41 and 44. 44 quarter. So hold on.
So we have put out the Eurozone consumer confidence
Alright, so
flash
those are
March
now-
2023
those
full
are all-
report on
those
the
are
news
both
feed for
working.
those of you that are
Two
interested.
different strategies. When will I cancel those shorts? Well, if this market's able to push an ATR out of this zone to the upside, that's bullish. Those shorts are canceled. But until that happens, those will sit there. This is the same ATR. So if this market does get up to 1875, 13,1875, then those shorts are disqualified. Right? This is able to push here. That's showing me that it's bullish. The setup's bullish. These are my rules from watching 15 million of these things. Then I cancel my shorts. But until that happens, I still take that short aggressively. All right, so that's working, and they just keep this thing. The old waterboarding keeps firing off here. All right.
US
So now this
Treasury
looks
is
like this is going to
auction
try to become a
$42 billion
bullish setup in the
in
asset.
2-year notes.
Unfortunately.
US Treasury
What
say they
short
could
this do?
auction $48 billion in 6-month bills.
5.3. All right, so again, if this gets up to 32 quarter, this is a bullish setup, and that's a bullish setup.
So the US to sell $22 billion of
So now,
reopened
the other trade, the Dada, whatever I was just talking about,
29th,
short-wise, those are all off the table
31st,
because this was able to
and
push
US
the
to sell
ATR above this
$43 billion
volume.
of 5-year notes
Now,
on
if
March
this
the
does
28th
this,
to
I can
settle
go
on
long
March
barf.
the 31st.
That's about all I got going here for the long side, as far as my strategies are concerned. But I do know, actually I don't know because there was no delta divergence here. So I was saying, I know Dada isn't possibly in play, but remember, yes, there was no delta divergence. So there's really nothing going for the short right here for my strategies. The only thing I can really take now is the long barf trade on a retest failure. Which
US
is
Treasury says they will conduct a small value
guaranteed, because that's
buyback
all these
operation
markets do,
for
they
amount
retest the
up to
value limits. That's why
$25
we have
million
specific
on
trades
March
for
the
that.
30th, 2023.
All right, let's see if there's any questions in here. I'm gonna take a drink. Last week OPEX and yesterday's huge VIX expiration played into the rally. Okay, great. I understand that. It is what it is. Like, I don't care what the reason is. I care what's happening, right? So you can't, if you're day trading, you got to be very careful of putting in your reasoning, your fundamental reasoning of what you think is happening. So just let the volume tell you. This is telling you what to do on how the market reacts to these areas, right? That's what you need to focus on, in my humble opinion. And I'm not very humble. Let's see. My bookmap lags. Okay, that's not a question for the YouTube. Near-av. Contact customer support on that. Last week, Opie already said that. Shaking monkeys out of the tree. Game strong today. I agree with that. That's exactly what's happening. What I call the screw you move. All right, so just waiting for a retest failure if it fails. So this is what else you can glean from these volume events, right? So we're waiting for this retest. We got the ATR. We're waiting for that, then I'll go long. If this goes like this and right through this zone, that's telling you something's up. Be ready to start shorting. I mean, on the new setups, meaning my thesis would be, I really want to start looking for shorts. Let's just see where this is, by the way. Speaking of, let's see if this is, it's almost trend up, right? It's moving up. We'll see. Doesn't mean this thing can't turn over. Remember, you want to be very, very careful taking shorts when this thing is above 2,000 and this thing cannot, it got to negative 500. That's nothing, right? You can see NASDAQ can't even break zero. These are not conditions to be shorting right now. I know I'll take the NASDAQ short. This is not part of my game plan as far as those strategies, but I'm giving you guys ideas on what you can incorporate into your trade plans. You could say you adapted my exact trade plans, and then you put in a caveat, but I don't take shorts if I can't see the tick getting below zero, or I don't take shorts if I see the ADD above 2,000. These are all factors that I'm giving you, right? It's not that you implement all of them. You take which ones make sense to you and then build your own trade plans, aka playbooks. And that's all these are. These are playbooks. Very basic things that we're doing. And this is going to show, again, we'll look at this month by month. April 6th is when I'll update it, and we'll look at the next webinar after that to see where we're at on those. But, all right, so crude just bounced off the zone again. I almost want to get stopped out on this short just so I can, this will be filled. I don't have to worry about this anymore. Then I'll have the slug. I almost hope that happens. I'm willing to sacrifice my short right now to get in a better short and have two strategies short for crude. Also, we didn't look at the bigger picture. This might be an Izzy too. This is, This is close. These are zones. So this is, I drew this here, but this was just to incorporate that gap down. So, I mean, do I take an Izzy if I get the stop run up there? Probably not. I'd wait for up here. So Izzy's not really in play for my short. I guess it is. If this holds, this I should already be short Izzy, put it that way, because this did move into the zone. But I do have a caveat for Izzy that's in my full descriptions of my playbooks, that if you're part of my room, you get obviously the full descriptions, examples, so on and so forth. If a market hangs out in a zone, I'll still take the Izzy, but I need to see ATR retest failure. So I can actually put on the Izzy short here too now, because this just did ATR retest failure. So actually I should be short right here on the Izzy. So hold on, put that on. After I just got done saying I hope this rips up. Izzy is actually the live trading account as well that I qualified. So that one already qualified. So all these are going to be live eventually, right? But Izzy, I just got to fill in that. That's this one is actually the live account. I already qualified for that. All right. Do I think the JP Morgan collar trade will push ES to 40.65? No idea. I let if I see volume events that are bullish, then I would say yeah, right? And this is looking like one of them. But again, guys, you're doing yourself a disservice if you're thinking that way. Yeah, you can have a thesis. You can say, hey, JP Morgan collar trade, I looked at spot gamma today, which is very, very useful information. We look at it all the time. I try to do it every morning in my trade room. The options dealers are huge players in these markets, and they have to hedge themselves, right? And there's no subjectiveness in their hedging. So when you get to a big spot gamma level, it's an important area. I use the stuff in a very basic sense. I mean, this guy is smarter than smart, right? So he just dives into all this stuff. I try to keep my trading as simple as possible. So I still pay attention to these levels, but I use them in the very basic sense. I don't, we come up here, I know that's resistance until it gets
Speaking at the same event as Bank of England's, man, we have put the video out on the news.
But yeah, if you have a thesis, if you read spot gamma and say, I think we're going to get to 40.65 in the cash, well then you can, if you get bullish setups like this one for instance right here, you can say, okay, I like his thesis on the JP Morgan collar. This is a bullish setup. I'm going to trade bigger size because I think we're going up there. You see what I'm saying? But don't what's the word I'm looking for? Force your will on the market of what you think should happen just because the JP Morgan collar looks like it's a magnet to 4,065. Don't just keep going long if you need to get this in line, the real-time volume events in line with what you want to do. That's what I'm getting at. All right, so this is not retesting. So this is one of the, for the way I trade, there is a potential that I miss this long, obviously, if it doesn't retest the zone. And I'm okay with that because I've just seen so many of these that I don't need to chase this market. If this does turn out and just keeps running, then there's going to be another volume event, and I'll draw the zone, and I'll do it all over again. And there's probably going to be another stop run right here. And there you go, right there's the 4,000. This is a really important level in more ways than one. Support level, obviously, spot gamma. Here we are. This is Mr. 15,000 buy ice as well. I know that probably has something to do with the option stuff. It's fine. It is what it is. You're never going to know what these guys were doing in this area unless you're sitting next to them. I know the volume area is important, just like this one was, just like this one was at the time, right? This one's like 6,000 at the close the other day. Failed, it failed, it failed, it failed, then it finally gapped through. And then it ripped through here, and then you can see this is right where it took off again. So there's an Izzy. This is an inflection zone. I could go, actually, I think was a stop run in the Izzy. So it doesn't matter now, and it wasn't, but if this volume event did occur in that zone started around 4,033, basically where we're at right now. I still wouldn't short it as an Izzy because it's got an ATR above there. All right, so, but if something new comes in, I definitely have Izzy as in play for a short, is what I'm saying. So you can see it just bounced right off of that level. So if you were long there, that's a place where you want to get out of some of your contracts. So this is what I talk about too. If you're just trading one lots, the regular size E-mini S&P, you're doing yourself a disservice because it's one and done. It's all or nothing. Trade 10 micros and you can get out of 3 up here and still have 7 on in case it does do that. You're not just, oh, I'm out, and then if it does that, you're like, oh, crap, man, I got out. I could have caught another 20 points. Get out of half or whatever you come up with as your rules. Stay consistent. Get out of half, get out of 5, and then try to let 5 run. That type of thing. Somebody's sending me messages. I think it's in my room. Mouthwash, what are you confused about? I'm confused, honey. Yes, didn't get that one ATR shot, then it hit 40-30. So wouldn't you be in barf? No, it didn't get an ATR above there. Unless this was not an ATR retest. I'm getting questions from my trade room, and they should know this. I talked about this. This did not get. Remember, it was 32.75. That was the ATR. It didn't get there, and it didn't even retest anyway. So I don't know what you're talking about here. So no, I would not be in the barf long already. All right. What was this price for the disqualification of those shorts in here? Right, but it changed since you last saw it, but it didn't change when it, when it moved away and came back. It was whatever it was. Yeah, you can change it now, but hold on. I just want to see what was the disqualification for this trade. For the short was 1875. ATR is right around the same. It's actually less now, 21.78. So the disqualification for those shorts that I have working, this market touches 1675. It actually did that. So that those shorts are off the table, and this is now a bullish setup as well. Boo. So these are my rules. This market was able to push an ATR out of this zone, more than an ATR. Shorts canceled. This is now a bullish setup. The way that I can take though here is the barf. Line ATR, retest, fail. Any setup. And I'm doing that to show that this stuff is an edge in itself, just by itself, right? Obviously, it's not going to be as strong as these setups in a specific area, like we're talking about these other strategies. But I've shown this before in my room. I did it for a full month, December 2021, I think it was, where I did a full month. All I did, no matter where we were on the charts, lugs, whatever, I just took every single setup was ATR retest failure, and it was profitable. I think I was trading like 1s and 2s. I think I made like 13, 14 grand for the month. So the point was to show that this is inherently the edge. Now, when you can apply this stuff in important areas that you deem important or whatever, then you have an extreme edge, right? So anyway, the BARF is always in play no matter what. So that's all I have going for both ES and NQ right now as far as along as the BARF trade. Hopefully that makes sense. But I need to cancel my NASDAQ shorts, potential shorts that is, 43, 41, and 44. All right. So now for both of these setups, I'm waiting for ATR retest failure, and then I'll go long, unfortunately. If it does that. But these markets, if they do this, now these are my rules from watching so many of these. You could say when it comes right back in the zone, yeah, I don't need to see it move back out and have to pay that extra 25 points. I'm going to get in right when it touches it. You could do that. We talk about this all the time. This is the science. Meaning this is. There's no confusion on what's going on here. This is a stop run. How you trade these is the art. So you can say, the minute I see that, I want to go. The minute it breaks out of that zone, and I actually did this in my original course. I talked about this, getting in right when it breaks the zone, stop goes below. Well, I did that for a while, but I adapted. After I kept getting ticked and stopped, and I'm like, you know what? I want to see. I need these parameters to take longs, and that's why I started incorporating the ATR. So trading is about evolving, right? You're not just going to pigeonhole yourself. The markets change, so I have evolved with the way I trade these, and the new course is going to go over that. I thought I was going to have it done by today. Not going to happen. I'm going out of town tonight. I should have it done next week, but it's going to incorporate all this new stuff because I've adapted. But anyway, my point is, if you want to take along right when it comes back in here and not wait for it to move back out, be my guest. You trade this however you want to trade them. These are from me watching so many of these. I demand that happens, so I don't have that happened, which happens all the time. And that's going to give you information if that does happen, by the way, like we talked about. All right, so I am waiting for a retest there. I'm waiting for a retest here and a failure. And then I'll go long. It's going to be painful, but I'm trading what I see. Speaking of volume events, here's one that just keeps in Mr. Algoville gold. Look at this market.
So Fed bids for 4-week bills
I tell you
total
guys, when it looks like a
$1.2
Christmas tree,
billion.
you know it's just ridden with algos. But volume of that, actually volume of that. It's not a coincidence. It keeps bouncing off that volume of that. That's what the market cares about. This is actually trade. These are trades here. This is the lick trade. Hold on, I'll put this on. Why not? A little late to the party here, but it did come back multiple times, so I did put this zone in earlier. 21 down to 10. I just got to make sure. I think something new came in. That's the issue here. Let's see. That was not threshold. That was threshold. So this was actually. You can see here this buy ice came in. This was 196 buy ice. Let's just draw the zone and see what's in play here. While we wait for equities to do something, then I'll try to add some more questions. I feel like I've been on this webinar for 6 hours. That looks right. I'm just going to change this to different colors so I don't confuse myself with the other zone. Oh, those aren't the same colors, but good enough. All right. Bring your bubbles back. So ATR in here is 25. So I think this actually got an ATR below here, which would have made this a short setup. This is a good example though. Did it do that? It did the ATR retest. Did it fail? Actually, I think it came back, but let's see. Yeah, so this is just bouncing around these two zones. So nothing's really, but I'm not going to go long off of this because the most recent setup was a potential short setup, right? With the ATR below there. I'm pretty sure that was ATR below. Let's just confirm it real quick. Why is this not on the exact? I don't really want to trade gold right now, to tell you the truth. It gives me a headache. And this is why it gives me a headache. Look at the algos in here. I thought natural gas was Mr. Algo. This is trying to be natural gas. Look at natural gas. Speaking of which, the number came out today, didn't it? I didn't hear anything happen. So this is putting natural gas to shame today. Look at this thing. Then you guys wonder why you get whipsawed. So when you put on trades in these markets, you just have to be ready for bucking Bronco, because that's what this stuff is. And this is why I force markets to push outside of these areas, because these algos know when nothing's going on, and that's when they start taking your money. Right? I'll come back to this. I don't even want to. I'm trying to avoid. I don't like trading gold stop runs because there's one every 5 seconds in there, and I want to see like big ice, not just like 100 or barely threshold. All right, so it looks like, hey, you guys ever see this pattern before? Huh, I've never seen this. Oh wait, we have exact strategies to play this trade. Here's your retest in NASDAQ. This looks like this was the 2 ATR. I'm hoping my room is taking these trades. We have one guy in there that's just killing it with he's always taking the 1 ATRs. I can't keep up with these on the webinars. 1 ATR would have been, you're in at 1450, short at 1450, you stop at 4075. You're in that, you just got your winner there. All you're doing is getting out on a retest of the zone. These are all part of my trade room, this strategy. Then the other one, if you got in the 2 ATR, that was 34 quarter. That didn't, I don't think that got up there. No, didn't get up to the 2, but you got the 1. And the 1 is what we look for to determine if this is a bearish or bullish setup, and this is bullish. All right, so here's your retest in NASDAQ. Now, just make sure that this is current. 22.41 now. Now, if this pops back out of here, I'm long at 2075. This is just the BARF, blind ATR retest failure. I could put on 4, round up. So BARF is 6, 2075, if it comes back. And remember, my shorts would disqualify because I pushed an ATR above there. That's just the way it is. Oh, actually, I have the lick trade here too. So you see that? So the lick trade, I demand ATR retest as well, just like BARF, but I can punt on BARF and lick. And lick, I'm just trying to catch a move up to the risk reward's not great on that one, but I'll take it because these markets do nothing but go up for some reason. Especially today. So I could put on...
So 10 minutes away now as we get the 4-week bill auctions. The US
trade
selling
is
at
number
$60 billion
43.
of 4-week bills. Prior bids cover of 2 to 43 and a prior high yield of 4.22%.
So those are ready and waiting if the market comes back. What did I say the price was? 20.75. All right, so those are locked and loaded for longs. So, like I said, if you are gung-ho about this market, you're
Crude
the
stocks
strongest.
stopped by CL.
There we go.
179 contracts.
Probably going to take a loss on this first one, but this is exactly what I wanted. This is now slug. I just wanted to fill this liquidity so I don't have to worry about it anymore, but this is what I've been waiting for, right? Remember I said I'd sacrifice those shorts to get back in, and this is it. There you go. We're real close. Need a little higher for the slug, but this is Dada once again. So even if I get stopped out of that first Dada that you guys saw me put on, here's another one. If I get stopped out, 81 is my stop. I'll put this right back on. This is the same setup. Delta divergence, extreme standard deviation of VWAP. I'll put it right back on. So anyway, what I was getting at yesterday, I was trying to avoid talking about it because I was a complete idiot. One, trading with Powell talking, and then I left an order in the order book for into the number on one of my live accounts, lost $1,000 there. I was just a wreck. I literally went on tilt yesterday mentally. Then I start trading, then I get mad. I missed a setup. Then I got mad. I missed it. Then I put it, and this is all while he's talking, which I should not be trading anyway when Powell's talking, because every keyword that comes out of his mouth, these algos pick up, and it's all bets off. It's just craziness, right? So then I'm like, okay, guy, I put it in the trade room. I'm taking a 20-minute break, and it was a perfect Dada. So I took Dada, loser, had a mistake, loser. Then this is what I talk about trading your probabilities. You just got to keep putting on the trade. So it was right here. I took, I missed, what did I miss? I missed one of these. I think it was here. I got stopped out. And then this is right where I said, I got to take a break, guys. I got to take a 20-minute break. I'll be back for that PM webinar. Whoops, I need to do that. Hold on.
NQ Ice Iceberg sell NQ. 151 contracts.
So that was right here. I got up from my chair. It went a little higher. Here's your Dada, extreme standard deviation. Here's your delta divergence. And guess what? Didn't put that one on because I wasn't at my desk. Oh, that was 200 straight points. This is what I mean. You take your loss, you're on to the next trade. So I take a small loss there, and then I missed a 200-point winner because I was inconsistent. So that's what I'm not going to do here in crude. If I get stopped out here, I'm ready to turn around, and here we are. We're almost at Mr. Lug. So this
NQ
is
stocks
technically
stopped by NQ. 153 contracts.
What's going on in here? What other stops right here? It's kind of a strange place. This is actually a double whammy here. All right, so what I'm going to do here, I don't want to miss this crude trade. So slug is in play here because it got above this zone, but it was not an ATR. So I'm going to put on slug short as well. I could potentially put on another Dada if I want to. So what am I doing here? First of all, let's get the zone prices in here. Then I'll go back to NASDAQ. Did I already put this in? Oh, this is right at the old zone. It's just a little higher. So
Gold stops stopped by GC. 528 contracts.
500 gold stops. That's a shocker. Anyway, this stop run started there. It's right around the same area, but I'm going to draw it accurately, and then I'm going to play slug off of this as well. Stop run into a major lug. So 71.61 down to 71.55 is your new zone. Oh, please hold on, crude. Please wait for me. This is so why it's so hard on one screen. 60, no, that's not even right. What did I say? Yeah, it is. No, it's not. 61 down to 55. I'm going to miss this trade. 71.55. ATR is 22. All right, so I could short aggressively. This is what the slug is. It's an aggressive short. At 30, I can put on 9.
It's 5 minutes away now as we get
And I
the
can add to
4-week
that.
bill
I don't want to
auctions
add
for
to
the
the
US
Dada
selling
because
$60
just because
billion
equity's
of
up there, I
4-week
think we
bills,
may go more
with a prior
move
bids
up
cover
there,
of
but
2 to
this is
43
right.
and a prior high yield of
71.30 is
4
the
spot
slug.
22%.
Short. So let me put that in. I'm already short at one Dada as it is. Wait a second. What did I? Yeah, number 41. I have Izzy on too. Izzy short too. Hold on, I'm just trying to get my bearings here. So slug is number 44. All right, so that's 71.30. And it's right.
Soy oil ice iceberg
Alright.
by ZL. 151 contracts.
So if that trades 71.30, then I am short Dada, slug, and Izzy. Talked about the Izzy because that was in the inflection zone. All right, so I never got filled on that long, I don't think. For NASDAQ, I'm talking now. If you guys think you're confused, try doing this all these markets on one screen.
US trade represents
And there was a new setup,
chances
so let's
that
draw this
remain
new setup.
open-minded to the US-UK trade deal.
$214 sell ice, and whereas this was threshold. You can see this was one house too. See this black line? That was one entity. All right, this is going to probably get a little confusing with this other zone here, but let's draw it. Got that. That looks right. This looks like it's probably a delayed double whammy too. Double whammy is the dumb money pukes into the waiting stop, or smart money. Alright, I think I didn't incorporate that stop run. So I can move this a little higher and then incorporate. So these are volume events, right? I'm looking for trap traders. I'm looking for high concentrated volume areas. So I want to incorporate that, and I'll incorporate that because it's not much higher, and I get it in there. It's only 4 points more. So I'm going to make this one big zone. All right, let's move that up to that. That looks right. Draw the new zone. So I will still take that long. So this is a variation, right? I don't want to confuse you guys if you're new in here. This is a variation. This is more advanced, right? So we were going to go long off a ATR retest failure of this zone, this yellow zone, first and foremost, right? So this is what I'm talking about. This is why I wait for that to go long, not into the zone. But anyway, since that has occurred, we have retested this. I was waiting for a fill here. I did not get filled. Now something new has come in. So I can still put on this original long, but I can trail my stop to this most recent setup. Then I can trade this the same way. But if this gets an ATR below this setup, then I am out. I'm canceling that long too. My original long. And then I can actually go short here. I think this is the, let's see what happened up here. This may be a slug. I can't even remember where we're at. This is still a slug. So that was a stop run. This is a Dada too. So this is a potential short. So we did have the stop run. That was right here. It actually just popped up right here into the lug. So that was a stop run into the lug. Delta divergence.
Shortly
Dada,
expecting the
extreme
4-week
standard
bill
deviation.
auction.
So
I'll leave
those
with
are
bids cover.
potential shorts. So I will get out. I will cancel my long, my barf long that I was going to take, and I can get short both of these setups aggressively, which is what I wanted to do the whole time. But I was letting the volume tell me what to do, meaning I wanted to be short the whole time. All right, let me make tonight. Hold on, I didn't put the zone in. Hold on, NASDAQ. So 425, 13,425, down to 95 quarter. That's what I said. This is getting interesting though. Like I said, if that first zone fails like that, that's giving you some information. 23.87. There's your ATR. All right, so I can short both of those setups. The Dada. Actually, this is an Izzy too, is it not? Dada. It's definitely Dada and Slug. 44.41. Aggressively, I could put on 4 contracts and I get short at 67.75. Please tell me it's not. Oh, that's my favorite window. I love that new thing they have for Windows. It's really, really fun. All right. That did not trade down there yet, so I'm still okay. So, but I'm putting these in right now as shorts. And if it trades 67.75, then that barf long is canceled as well. So that's 41. And 44. So those are working, and then I think
Gold Ice Iceberg by GC. 152
I
contracts.
still have the energy for gold right now, and this was an Izzy, right? Yeah, this is an Izzy too. So I'm gonna have 3 different shorts on here if this trades
The
67.75.
Evergrande units
That's
fails
the
to pay
inflection
interest
zone.
on bonds
That's an
issued in
aggressive trade as well,
2020.
where I don't wait for ATR retest like I wait for the barf. And that's the live account. But I can only risk 250 on that one. Hold on here. So I can only put on 2 on that account because I can't risk $500 because my max drawdown is $2,500 and it's trailing. This is all in the Apex stuff that I was telling you about. Hold on. All right. So those are all locked and loaded. I'm going short if it touches 75. Going short the Slug. We've talked about it. Izzy, we've talked about it. Dada. I have this working as a long, but if these get filled, that's obviously got it outside
Bids
an
to cover
ATR
2 to
from
54,
that
2
last
to
live event.
54, and a high
This
yield
will
of
be canceled.
4.15%, 4.15%.
If this
So the
doesn't
US
get to
sending $61 billion
67.75
of 4-week
and
bills
moves back
and awards
higher, then I can play another
57.04% of bids
barf
to
off
high.
of this event, right? But it's disqualified, and I'm going to be short if it gets an ATR below here, and that's at that price. And then it'll also confirm, like I talked about earlier. Remember I said this is telling you something if this got an ATR above here, and then this yellow zone doesn't hold, and it just melts right through it. Bye bye. And I'm positioned for that, right? So now I'm just waiting to see which way this goes. I'm positioned for, I can be long here, I can be short here. Orders are working. We shall see. But do you see how everything's structured? And I'm not sitting here like, and here's your retest, by the way, of the, let me put this in too. But I'm not like, oh, I don't know what I should do here. Well, this is saying go long. This is saying go short. I have my strategies. I have my prices. It's black and white. I put the stuff in. I let it work. I take advantage of my edge. That's it. Guys, it will clear your mind so much if you can have strategies like that, especially on different accounts where it's like, okay, well, this one's long, and then these are potentially short. And when they fire off, you put them on, and you just let it play out. You cannot impose your will on the market. You can't wish your stuff to work. Just follow your rules. That's why you need playbooks and rules. All right, so I can go long here at 33.50. This is same exact ATR. I can put on 5. This is the barf trade, right? I don't want this trade on. I want this thing to die, but this is telling me that I potentially need to go long because I respect the most powerful edge in the history of futures, in my opinion. 33.75, 33.50. I can put on 5. This is barf. 33.50. All right, so that's working. All right, we're pretty much at the time. Let me see if there's any questions in here. My head's spinning anyway for trying to play with all these markets on one screen. It's ridiculous. Hold on. All right, no questions on YouTube. Last question was the JP Morgan collar trade. I don't know. You let the market tell you if it's going up there. Like I said, if you have a long bias, then trade your long setups bigger. Your new course should be available in April. It should be. I should be done with it next week. My goal was to get done with it today. I'm going out of town tonight. It's way more enhanced. Like there's just so much more to it with the ATR, the zone drawing, the sweeps, it's just way more. The old course is very, it's still very legitimate with it's all the same setups, but I've changed some stuff, right? So it's definitely going to cost a little more just because there's so much more. I put so much more time in it. That's why it's taking me forever to do, but it will be done soon. I will send out an ass. Now, that was me yesterday trading. I will send out a mass email when it's ready. So if you're not part of my website, just go in there and put in your info. When it's ready, I will send out the mass email for that. All right, guys. So basically, if this bounces off this zone, I'm going long. I'll go along both of these as long as these zones hold. But if this trade 67.75, this long is canceled, and I'm going to be short 3 different strategies there. And again, if this doesn't pop back up to 35 or 30, whatever I said, 32.75 for the long, if this gets back through this zone, watch out, because this should not, especially that I was able to poke an ATR above there, that should not happen. If it does, then look out below. And I think this has already done the screw you move for today, so maybe it's ready to sell off now. So if I do, the Izzy wasn't in play here because that zone got an ATR above there, but if I get a new setup in this zone and it doesn't get an ATR above, I'll take the Izzy short there too, just like I'm going to do in the NASDAQ. And then I'm still short multiple things in crude here. I put on the slug. Actually, I just got filled on the slug short. So in crude, I got slug. Actually, this is barf too, because this today. No, it's not barf. This is a new setup, so I would have to wait for an ATR retest of that. But I'm short slug, Izzy, and Dada in crude. Like I said, play your percentages. If this comes back up here, stops me out, I get a new setup, I'm right back in it. Don't be me like I did yesterday and walk away and then you catch the 200, you miss the 200-point move. All right, hopefully you guys are learning. I'm sure it feels like you're, as some new members of my trade room say, I feel like I'm drinking from a fire hose. It's all very basic. Trust me, once you learn it, then you got it. It's not, everything will start clicking and everything slows down. So I do this twice a day in my trade room, just like this. I do it for the opening and the close. So if you want to learn, I'm there for you. I will see you guys. Have a great weekend, and I'll see everybody next week, next Thursday. Thank you.